Hello traders and investors, welcome back to the Trend Trader channel. In today's video, we're going to be looking at some of the charts of the companies that will be reporting their earnings these coming weeks. As you can see, it's a lot of companies, and this list is by no means exhaustive, but we're just going to focus on some of the companies that are here. So if there is any specific company that you're interested in, we will also make sure that we have a timestamp for the companies that we are going to cover. Obviously, we are not going to be able to cover all of these companies. We are just going to cover those companies where we might have interest, or those companies that have interesting charts, or if there's anything that we find interesting about those companies. Before we proceed, I would like to ask those who haven't subscribed to please consider subscribing, and if you find value in this video, please make sure that you smash that like button. If there's any company that you would like us to cover, you can leave that in the comment section. And to ask you, we know that we do get viewers from across the globe, so if you can just go to the comment section and comment with the flag of your country, just to show us where you are watching these videos. So the company that you're gonna start with, it's Li Auto. There's not so much that is interesting about that company. However, it's one of those companies that is making those EV. It's one of those EV manufacturers. We saw that some of them have been experiencing some challenges. So the time frame, or the time period that you're gonna be looking at, we're going to be looking back from the beginning of 2022 up to where we are in 2024, and also we are using the weekly time frame. So whatever that we are talking about, it is based on a weekly time frame, because we think that using a weekly time frame give us enough time to be able to determine the companies that will be interested to trade in the upcoming week, and also it helps us to stay in some positions a bit longer. So as you can see, Li Auto, it's been on a nice uptrend for the past several weeks. You can see that there is also some accumulation that has been happening in there. However, with the likes of NIO and also Tesla not moving up there, it might not be the best company or the best technical setup, because here we are talking about technical setup. We are not necessarily talking about the company as they are. We don't have information on the previous earnings report from Li Auto, but it will be interesting in the upcoming result to see if the company is profitable. If it's profitable, obviously if it's profitable, then we would like to see how much the earnings per share are changing in comparison to year-on-year result, and also quarter-on-quarter results. Another stock, remember that Li Auto is going to be releasing, so the companies that will be releasing their result before market open on Monday. The market that we're talking about is the US market. So some of these companies, they will be listed in the New York Security Exchange, or they are listed in the Nasdaq exchange. We saw that everybody was talking about the Berkshire weekend, so there's a lot that was coming from that company there. So we're gonna be looking at the Berkshire Hathaway, the B class. So I've mentioned in the past that this company was interesting when it broke above this level here. You can see it's been on a nice uptrend. This was an ideal point to buy the Berkshire Hathaway shares. You can see now the stock has just rallied up from somewhere around $365 to about $17. Well, we cannot predict how the results are going to look like. Obviously, if the results are good, the share price is just gonna continue to move further up there. Well, if maybe the results are not that great, there might be a bit of a pullback, but depending on the general market, the pullback might be a bit far-fetched. So we'll be keeping an eye. We don't have a position on this company, however we'll be keeping an eye, especially following the comments that were made by Warren Buffett to say that they've got plenty of cash. However, in terms of the cash, they already have plenty of cash, but they don't see some companies where they can deploy that cash. So it would be interesting to see where those results are going to go. Moving forward, we're gonna look at Unity and Zoom. Unity is a tech company. We saw that a lot of tech companies, they have been doing well. Unfortunately for Unity, it is not doing well. As you can see that the share price is trading below a key moving average in there. However, we still see that it's a higher low, so this low is higher compared to the recent low in there. If some good results can come and we see the stock closing above this key moving average, maybe the share price can then try to recover, but that will be will largely depend on how the results are coming and also the interpretation of those results. But as things stand, there's nothing that is interesting for us in terms of this setup. And then let us look at Zoom. There was a time where Zoom was making a lot of money, but for quite some time now you can see that Zoom it went up nicely. People made a lot of money around 2020 with Zoom, where the stock hit topped there somewhere around 600, just above $600 per share. Since then, the stock has been either trending low or it has been moving sideways. So at this moment, there is no sign of bottoming. So we're going to see how long this consolidation there it happens. However, we're gonna see if the results are great, maybe there might be a bounce up. If the results are not so great, then maybe there could be a breakdown. So it will be interesting to see how Zoom is going to perform after they have released their earnings result. Been looking at companies such as this is another payment company. We know that PayPal, it came with their result. People were not interested or were not impressed with their result. Then the stock started to trade lower. You can see that Shift Payments is somewhere near this recent highs there around $75 per share. You can see the moving average is pointing up, meaning that there's a bit of an upside momentum. Obviously, if the results they are positive, then we can expect the share price to break above this level, which can open an opportunity for the share price to continue to move further up there. However, we are going to wait to see how those results are coming. Remember that some companies, especially tech companies and some startups, they might not be profitable at their early stages. So sometimes even if a company does not report a profit, but if the sentiment around that company and what they are thinking, what they think that they will achieve in future, can have a positive impact in those kinds of results. But for us, we don't have a position, and we'll be keen to see how a Shift Payment it comes up with those results. Looking at lows there, it's one of those companies that behaves like a Costco. It's a big supermarket. We can see that the stock has made this nice V. So depending on how you see things, this looks potentially like a cup and a handle with a breakout happening in here around $224. The stock is trending somewhere near this recent high there. So any positive news will easily push the share price to move further up there. Let me just redraw so that it can become clear. So this is a potential cup and handle with a bear flag break above this level here, confirming that the share price is moving up. At this moment, we are looking to see how the price is going to behave based on the result. If it comes here, in the past we have shown that if we see a setup like a cup and handle, that setup has a potential to move further up, and we traded that setup with things such as the Triple Q ETF. We traded that with Spotify and other companies with a considerable amount of success. So a cup and handle pattern, it's one pattern that we like to see. But for lows, we're going to see how it is going to behave based on the result that they are going to come up with. First Solar, we no longer have much faith. We saw some of those companies, they did okay. Eventually, they started having challenges. Now, if you look at the chart of Cava Group, what we like about this company, the IPO came around July 2023. We saw that there was a big buy before the price started to decline. Then the share price came back to that pre-IPO or at that IPO level, and since then the share price has managed to push coming back to test this high up there. So if there's going to be some positive news, then we won't be surprised to see Cava breaking above this recent high and then continuing to trade further up there. Remember that some of these new companies with those IPOs less than 3 to 5 years, they still have some things there. They still need to prove themselves in the market. So depending on how the market think or like these companies, then we can see that there could be some sort of buying and selling of these particular companies. Okay, there was a time where people, they had a huge interest on Galactic company there, that space. Unfortunately, the share price disappointed a lot of investors. Remember, not every company in the market is going to do very well. If you can just look at the price action of Virgin Galactic, you can see that whatever hype was there, it did not live to the expectations. As we saw that the share price, it has been on a nice downtrend there. Yes, on 2020 there was a big spike up there before it started going. I mean, if you look at this, it went as high as about $56 per share, and now it is trading about $1.65. So it is one of those companies that have hugely disappointed investors. The next 3 companies we're going to be looking at is Marathon Digital Holding. We're also going to be looking at Snowflakes, and also we're going to be looking at Salesforce. The other companies that we're going to look at later on is Celsius Holdings. We've been looking at that company for quite some time now. It is an interesting company. There is also ZScaler there. It's another company that has done incredibly well in the past. We're also gonna look at companies such as Autodesk, just to see what is happening with those companies. So first, let us look at the chart of Marathon Digital. So what we see from this company, there was this pullback that was happening here before the stock found itself from another buy area. The stock tried to rally before it pulled back. However, it did find support on that rising moving average there. In the past, we spoke about companies that move up, come back to retest key levels, and then before coming back to continue with that trend or upward movement. What you want to do, you want to note the recent high there and have like sort of a resistance level, and then make sure that you buy that stock as soon as it breaks above this level, because then you expect that stock is going to continue to trade further up. However, nothing is guaranteed. Just because the stock managed to break above that level does not mean that it cannot break below that level, and that is why you need to always, whenever you buy breakout, you need to ensure that you do have a stop loss in case the market comes back and invalidates that long position that you would have initiated. As things stand, we like this resistance that you see here with a Marathon. Based on the result, then it will be interesting to see if the stock does manage to break above this level, and it would be nice if that happen with a nice big volume there to show that there are buyers that are pushing the share price up. And then let us look at Snowflake to see how the chart looks like. So again, you can see Snow. For those people that are familiar with stage analysis, you can see that there was that nice breakout. The stock went above and then it came back to retest that level before it continued again. It break above this recent high. The stock is still moving up there. You can see that there is that nice rising moving average there. So in terms of technical analysis, not taking into consideration the fact that there's going to be earnings report this week, technically Snowflake it does look nice. Then it is a company that we can consider adding into our position. However, what you need to keep in mind, if some of these companies, as they are recovering, they still have a lot of way to go up to prove themselves. As you can see, we've got this sort of potential resistance level area. These are the previous area of value values. So if Snowflake can manage to break above this level, to trade above this level, then we can be happy to expect that there will be a continuation of that price upward, depending on what the market think of the stock, and also depending on how this company is going to report, or the earnings of the company, how they're going to be. Then the share price can go either way, but remember, we are buyers, we are always interested in an upward movement. And then let us look at Salesforce CRM. Again, CRM is just near that previous high of somewhere around $300 per share. As you can see, the stock has had a nice uptrend since it traded somewhere around $120 per share. So the ideal time to buy the stock was when it started to trade above this key moving average, but also when it came back to retest that key moving average in there. So as you can see, the stock has gone up by a considerable amount, and we like to see that with companies, for you to be able to make money from a stock, the stock it should already have been up by a decent amount of percentage, which is something that we see with Salesforce. Again, some of the things, they will depend on the fundamental result or the earnings report, but based on technical analysis, this is a stock that you should consider to add into your portfolio. Let us look at Celsius Holding. This is a company that produces a certain kind of drink. People seem to like the drink. What we like is the chart. You can see that the stock has been moving up there nicely, which is great. It has been finding support at key levels. At this moment where we are, there was this breakout that happened just before September 2023. As you can see, the stock has came back to trade near that support level after it reached this high of about $68. Since then, the stock has just been consolidating, moving sideways, and then now it is trying to come back and test that $68 level. With the earnings on their way, it should be, we are interested in seeing whether Celsius is going to break above this level. If it does break above this level, then we can expect the share price to continue to trade further up. However, we know that in terms of earnings, if you compare quarter on quarter or sales, they have been growing sales there. Also, they've been managing to grow earnings. However, anything is possible. We cannot predict where the share price is going to go with absolute certainty. So we should also prepare for the worst. In case the share price fails to break above this level, then it might come back to retest this level. So we don't have a position at the moment, but we do have a buy stop order above $68 per share, with the stop somewhere around $64 per share. So we'll just gonna keep that order alive before so that you can see if it will trigger, if that buy stop order will be triggered. If it will be triggered, great. If it's not triggered, then as you can see, also the company is going to report its earnings just before the market open, meaning that we will know the result before the market opens. And also it's possible that the pre-market price can be high or low, depending on how those results came and how the market interpreted those results. And then now let us look at ZScaler. It's one of those companies that has done incredibly well year to date. So let's see if there's still an opportunity for us to get a low risk entry. As you can see on the chart of ZScaler, it's also been moving up nicely on that uptrend. We see that last week there was that price breakdown. Unfortunately, we did not initiate a position when that pullback happened, but now what can potentially give us a low risk entry, it's a close above this level. So we'll be keeping an eye on the stock to see how the share price behaves once those earnings are out. If the earnings, they are looking fine in terms of growing earnings, growing sales, growing revenue, then we can expect the share price of ZScaler to cross and break above that $250 region. If it does, then we could potentially have a position in there, but if it doesn't happen, then we'll continue to sit on the sidelines until there's a better entry opportunity that gives us a a low risk and a potential for high reward. So that's it for today. Those are the companies that we wanted to cover. So just a quick recap: the company that we covered today is ZScaler. We covered Celsius, we covered Mara, Snow, and CRM. We also look at the uninteresting chart of buy today, and then we looked at Cava. We looked at lows. We like the technical analysis of lows there. There's nothing that is interesting with Zoom and Unity and Li Auto. Perhaps a stock that we can look at is Workday, just because Workday and Heico, just because Workday is one of those companies that really benefited from those 2020 crisis. So let's see what we see in terms of Workday. So you see, we nearly missed a nice beautiful setup there. We can see that Workday has came back to test this high here. So now the stock is just trading near new all-time highs. These are the kinds of setup that we are always looking for, the kinds of setup that we're interested in. So we will be looking to initiate a position from this company. Remember, there's no share price that is too high in terms of technical analysis, but if you use other different kinds of analysis, then maybe you might feel like the company is becoming too expensive for your liking. But for us, this is the right place to buy this particular company. And then let us look at Heico. This is another company with a beautiful setup there. However, the share price has already broke above this ideal buy area. Now in terms of risk, the risk is just too big for us, so there's no need for us to chase this particular stock. If the earnings they come, they are right, they are okay, the market is happy, there's a positive sentiment, then the share price can continue to go further up. But we're just gonna miss that particular move, because now there's no point to chase these particular companies. What we like though, and it's some kind of analysis that you can use to look for opportunities in other companies. We see there's a nice accumulation that has been happening in the past weeks, and then we are not surprised that the share price broke above this level. So if you go back to some of the analysis that we did, especially where the companies were just trading near their breakout level, it is something that you can also look at. Just go back a few weeks to see if there was a buying pressure or selling pressure that was happening. So a selling pressure will look something like this, where there's just a large number of weeks where people are trying to push the price lower, and then, or if there was a buying pressure, which is where people have just been accumulating that particular stock. Those are the kind of setup that can really put you, would say maybe it's a low risk, potential high reward setup, and those are the kind of setup that you should look for from time to time in order to try to get better performance in your portfolio. So that's it for today. Again, for those who haven't subscribed, please consider subscribing, and if you found value in this video, please make sure that you smash that like button. We will see you in the next video.